the trading range. But before, I would like to say what is the trading range. Yes, well, when we are in a dealing room in the morning, we study the trading range. In other words, the trading range is where the banks closed client's order or interbanking order. Okay, well, because what we do when we start in the morning, there is the possibility that a bank, another bank, for example, call my bank for a price in the million euro dollar. Another bank call the bank where I work as a trader. This is interbanking. It's called interbanking. Exactly. So I had to shove immediately a price. And I don't know if is buyer or seller. In the same moment that another bank, or for example, a client that call for a price, sell or buy, I close immediately the position inside the trading range using scalping. This is the reason why we use scalping, only to close positions that are not our position. Outside the trading range, we try to buy or sell. This is the reason why we must control what is the trading range at the time. Now I will share my monitor with you and I showed you how to calculate the trading range. Let me see when you can see my platform. Can you see? Okay, start. This is the first trading range, 30 minute minimum available spread, 2 or 3 hours. What I mean, I consider the last four maximum 6 bar to control the trading range. Trading range on 30 minutes minimum spread is 31 pips because the more the trading range is tight, I mean tight, the more is untrustable. So minimum is 31 pips of spread between downside and upside. Okay, great. As you can see, I use the grids to control the trading range. The grid, this grid, this one. Okay? Yes. Why? Because take a look. Over the bottom on the last 2 hours, the next grid is a 124 and 48. Over the top is 124 and in this case I consider just 2 hours. 48 maximum, the top was over here, so the next grid is a 97. 48, 97 is the trading range. Okay? Stop me if I am not so clear. By the way, okay, now I have the trading range. What I mean, as a trader, yes, this is just an example, okay? Because after 3 hours is a long time to consider available a trading range on 30 minutes. Yes, above the 3 hours. Now what I do, in other words, the trading range is a neutral, I will consider, because I am not a bank, a trading range as a neutral zone. In other words, I'm flat between 48 and 97. This is the first step because the risk to trade inside is that, for example, I sell or buy, arrives an order, and I will show you later some orders, some example about, and the market might move higher or lower, and I'm going immediately in stop loss because inside the trading range, banks close clients and interbanking orders. Yes, agreed. Is the first protection. So be flat inside. As you can see from my tweets on Twitter, I used to say trading range is a message from my students because every students know that I mean flat inside this trading range. Well, as we used to say, a professional, tell me, Is exactly inside the trading range, flat. In other words, I do not sell and buy in this 30, uh, in this 40, 39 pips. As English say, sitting on your hands. Okay. Well, what I mean, a trader, we used to say a professional trader must be able to anticipate the market. What I mean with anticipate the market, I do not, do not mean I have to sell or buy before the others, but I must be in control of what I'm going to do outside the trading range. Okay? Well, what I mean, this is the second target. In other words, I calculate, this is just an example, what is my action price, up and down, action price and target. So I will consider that in case, this is just an example because we didn't have the lesson about the budget, but this is just an example. Above 97, I will buy for a first target on a 125 and 16. So 17 pips more or less. Can you repeat one above? What? What? Oh, it's just an example. Because to be trader, I must be in control. Okay? So I have my neutral zone. Outside my neutral zone, I buy for a target of 125 and 15, 16. Below, I sell for a target in area 124 and 28. This is just an example. In other words, please translate. No, the target is just an example because, as I said, we have a no forward. We will see where is our target with the formula, for profit and loss during the daily. It's just an example. So a trader think to be in control as using trading range. And what is a possible target? Up and down. So I am in control. Yeah. Someone is hey, Walter, where is the stop loss? The stop loss is if the price, remember this number, please, because apparently I go random, but everything is linked. Is my strategy to mentor? So my stop loss will be if the price back in range maximum 6-8 pips. This is the first reason, to reduce the risk. If the price back in range, I'm in neutral zone again, and so I close. Well, many pips, the red one and yellow one, are just 60 because the timing, I still talking about the timing. But now please follow me because I don't want to confuse you. Second reason is that in case up or down, eventually break up or break down, must be tested 3 times. So in this case, we reduce our stop loss between 16 and 24 pips. Sorry, 18 and 24. In other words, if we must to use the price 3 times, minimum stop loss is between 18, 6 for 3, and or 8 for 3, 24. So we know exactly that our stop loss in every case is fixed. Yes, okay, that's good. Just a second, please. Well, so now that why to test 3 times the trading range if break up or down. Because if doesn't work, there are only 2 reasons. First reason, the market is flat, doesn't move. Second reason, trading range is wrong. Wrong. So now we have apart the control of the market. Then we can use the timing. What I mean for timing? To entry, to sell, on buy. In the bank, I know perfectly if the price was paid 97 or was given at 48. But using provider, I don't know because it's possible that provider show me, for example, 98 and they have an offer at 97, or vice versa, they have a bid of 48 and they show me 47. Because in the bank we have another system that confirms that in the market was paid really real or was given real, but no as a retail investor. Yes, that's what I'm talking about. What I do, for example, my provider use a spread between 1 or 2 pips. So I will consider to be long or short in action price if the price moves up 1 maximum 2 pips, up or down. In other words, if I have 97, I will buy only at 98 or maximum 99. I will sell below 48 or max 47 or maximum 46. Just to have a sense that the price might be good. But it's not over here because tomorrow we will see how to trade. Today we will see how to control the market using the trading range. As you can see, many times when I tweet, I use the indicator. Yes. In this case, as you can see, market seems like to be overbought. So my trading range is good. People loves technical analysis, but we doesn't need because this is just a confirmation. I do not use first Bollinger, then I use the trading range, but the opposite. First I put the trading range and I confirm using Bollinger. Okay? In fact, if I use another indicator like Ichimoku, I have the same confirmation. Market is kept in this zone, but can go down below this. As you can see, two different trading indicators confirms the trading range. Okay, it's not over because we can control as well 1 hour trading range. So if we have a possibility during the day, we must be able to control the trading range till 30 minutes to daily just to have a view. Because if we consider and we have the trading range available from 30 minutes to daily, we have all resistance and support of the euro dollar. In the same, well, if I do not have, for example, an available trading range on 30 minutes, I immediately take a look to 1 hour. 30 minutes is the first one. But if I do not have a 30 minutes, just for example, I have to control if I have a trading range on 1 hour because I need always a reference for buy and sell. I can't sell just because the market moves down. What is the reason? Well, because it's important to compare every, if we have, because if there are the condition in the market, of course, we must be able to control the trading range on, in this case, 30 minutes and 1 hour. 1 hour, 30 minutes, for example, do you remember? Uh, uh, mm, but we will see tomorrow uh, how to trade in this case. We have uh, a trading range down below 48, and now we have 1 hour below 42. So if we move down, just for example, I know that a 42 might be just a little support at 42 on 1 hour. Yes, on 1 hour. I know I have a little support 42, but it's not over because I can control as well the 4 hour, or sorry, trading range minimum 50 pips of spread, or the price is not available. 1 hour, 50 pips of spread. Do not worry because after this lesson, I will send you the screenshot by mail. 50 pips. Well, because the more time frames is wider, the more the spread is wider. Easy. Then we have 4 hours trading range. Minimum 80, 100 pips spread. In this case, I see, considering the last 4, 8, 12, and 16 hours, I have a trading range between 125 and 123 and 86. When I have a trading range like that the bias is down, I can consider that if I am short and the market break down 30 minutes, 1 hour, I have to close my deal below this area before 123 and 86 because the more the price, the time frame is wider, the more the resistance and support are difficult to break up or down. As you can see, the market showed me that at the time, on 4 hour, the bottom is in area 123 and 86. Yes, do not worry. As you can see, looking at, we have a market at 124 and 60. Okay, and market showed me that that euro dollar is heavy at the time. It's still moving down. But I have another signal. So if I still short, I must be able to close below this area because to break down 123 and 86 is a 4 hour, so it's a little bit hard. So if I am short at 24 and 47 on 30 minutes, I will consider an area for take profit in case the market move decisively down before 123 and 86. And this is important as well because if I do not have an available trading range and can have, I have, for example, an untrustable trading range on 30 minutes on 1 hour, I take a look on 4 hour. Many times I used to tweet, I'm working on 4 hour. Or I sell if the signal confirmed on 4 hours. What I mean? A, there are not trustable trading range on 30 minutes and 1 hour. There is another important reason to check as well the euro dollar on daily. Daily trading range, minimum 120 pips of spread. If I take a look at the last 3 days, I have a trading range closed 125 and 69, 68, 123 and 02. 123 and 02 will be the possible target, for example, if the market breaks down, of course, not in the same moment, if the market moves down below the 4-hour trading range. So I have completely the control of the market and target. Stop losses fixed, 6-8 pips for any time frames, the same. Then now I know, for example, I have another input. If the market moves below 4 hour, I mean 123 and 86, next target might be possible in area 123 and 02. So now you can see that I have all the control of the market, because we must be able, thanks to the trading range, to be in control of the market, avoiding that the market control us. Because the problem of many traders is they open an account, they study technical analysis, and they trade. And that's wrong. Because you sell or buy without a target or a reference in the market, up or down. So the risk is that market control you. The more we are able to control the market, the more our behavioral approach is better to trade. Because we perfectly know what we're going to do. Once time the stop loss is fixed, we must be concentrated only if we are in profit. But this is the lesson of tomorrow. Well, another example how to use the grid is if we are square. This is a 30 minutes. As you can see, the red line is not more on the grid. So if we are flat, so if we are short, is not, or if we are in position, not. But if we are flat, we must be immediately, as well for a minimum movement, move our trading range on the new grid. This is the reason why we use the grid. Because thanks to the grid, we can see immediately is our trading range in case we are square. We are immediately ready to update the new trading range as well for 1 pips to pips, but it's very important because this trading range is a little bit wider and tell me, hey, buy only above 48. As you can see, the trend is down on 30 minutes, but sell only below 51 instead of 48. Remember the first 30 minutes was 48 on the downside. Now it's 51. Now it's 124 and 51. Well, every time, because every candle, especially on 30 minutes, might moves just a little up or down our trading range. That's why if I control the 30 minutes, the next candle confirms that euro dollar was just a little bit higher, 3 pips higher. So I have the opportunity to sell below 51 instead of below 48. Well, the trading range was a little bit higher, but the trend is down inside the trading range. As you can see, 1, 2, 3, 4, market moves down. So instead of to sell below 48 like in the first trading range, I update, am ready to sell below 124, 124 and 51. In other words, I will sell at 50 or 49. Well, when we have a trading range, close what? No, 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 no. It's not important. If inside the trading range, the bar still inside the trading range, we must update. But if the market moves down, now I will sell below 51 instead of below 48, like in the first trading range on 30 minutes. Yeah, yes, on the line. Red line is basically, as you can see from my tweets, yeah, we are interesting just if the market moves below or upside. But confirms, this new bar confirms that the trading range was just a little bit higher. And in this case, we update immediately just a little bit high to be on the grid with the red line. Just a second. Take a look. This was the first, it was the first trading range, right? 48, 97 on 30 minutes. This is the next trading range. Okay, great. So now, tomorrow we will see how to calculate the trading range together because during mentoring we will learn first of all to set up the your computer like mine just to understand the trading range. This is the exactly market, for example, now. By the way, step by step, we have to learn how to trade like a trader. Well, remember, to be trader is a job. To trade is an art. Is an art. RRT. In this case, we will use, sorry, I stopped for a while to share my monitor. In this case, tomorrow I will show you that in a single technique, action price, we have three different techniques. Because the secret of the market is to be always in control and to have more option. Okay. Well, now I should be able to understand what you do in the morning when you start to trade. So I mean, what what you take a look, articles, charts. Yeah. Okay. Yes, I understand. Well, now I show you one on the first element where is the reason to be flat inside the trading range. You should know that the Forex department in a bank, we work on Forex market using spot. That is the market what we use, spot. Money market, money market is to trade on interest rate instead of price. And we have as well forward market. Forward market is a mix to trade between interest rates and the spot in long period. Then we have derivatives desk, futures, option. Then we have a customer desk. What is a customer desk? Is a sort of for professionals, trader that still at the phone all the day to push the clients to work with our bank instead of other bank. Okay, now I show you an example that can happen during a day in a medium big bank more than one times. Suppose arrives a client. This is a typical movement that a bank, that a big, for example, a big car company in the States can do. Call a bank for 50 million financement on euro on 3 months. Okay, take a look. So immediately, the customer desk say, hey, to the money market desk, I need an interest rate for 3 months on euro. Suppose the customer, the money market desk sees, say, is 0.20%. Just an example, of course. The clients say, okay, done. So the deal is closed. But that's not true because in the same moment that the clients take the financement, his risk is to be short of 50 million in euro dollar. Short of it. So to close the deal, the clients needs to buy 50 million euro dollar at the price of the market. So suppose I show you the clients a price of 123 and 49, and the client say okay, done, and I close. So meanwhile I have to close the deal calling other bank, and when I find a price 2 or 3 pips, 1 pips minus, I close the deal and I bought in the market 50 million euro dollar. This is the reason why if you are short of 1 lot, 2 lot, half lot in the market, I arrive with an order to buy 50 million euro dollars. You go immediately in stop loss because the market moves up. This is just a little example why do not trade inside the trading range. So just to have an idea of the market like a professional trader, we must control just once time a day, I mean only once, when we have the big news on United States, control twice, 3 and 6 month euro rate, and 3 and 6 month dollar rate. You can ask me why 3 and 6 months? Because these two periods are the more tradable for loan, financement, mortgage. So the reference on 3 and 6 months of the interest rate are very important because if you take a look that euro, for example, moves up on 3 and 6 months just a little, might be possible that we have a lot of deal like that, just for example, or mortgage. Because if the market moves just a little, interest rate moves just a little bit higher, might be possible that people is buying euro dollar on money market in terms of mortgage, loan, finance, like the example. Then, to have a completely view of the market, take a look as well to dollar index and euro index. Yes, exactly. Then take a look to the gold dollar. No, 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 no. The price between you gold and dollar, because the more gold moves up, the more dollar moves down, and vice versa. WTE oil dollars. Yes, is the same movement because the more the euro dollar moves down, the more the price of oil moves up. What you see? Yes. It are a good indicators because it's the situation at the moment of the market. The more input I have, the more I have an idea. Yes, exactly. Treasury note. And 10 years Treasury note on United States bond. Yes, because the more the yield move up, the more the outlook for the interest rate in United States is positive. The more the yield move up, the more there is the possibility that interest rate in US move up. Now you have a sort of control on the market. Then you have the trading range and you can start. Then you can use your technical analysis or read some article. But this is how to start to take a look to the market as a professional trader. That's all for the day. I thank you very much. And tomorrow we will sit together how to trade, and we we upset our monitor in the same mode so we can start to have the same trading range. See you tomorrow. Enjoy your evening. Thank you very much. Bye bye for now. See you tomorrow. Bye.